All right, so where do I really begin? Where do I really begin? The 23rd and 24th of September have come and gone. The blood moon, as of yesterday, has come and gone. Nothing has seemed to have happened. Markets were down again today, of course. Not an epic crash. What's going on? What happened with those dates? I guess we're in the clear. I guess all is fine and good. No. It is still on like Donkey Kong. It is going to occur. So let me read you a couple things here. My buddy Gregory Manarino, he has a post today. Stock market meltdown, a warning from a Wall Street icon. A man who is regarded as one of the best investors of all time is issuing a warning regarding an upcoming stock market meltdown. I am referring to Carl Icahn. In fact, he is so serious about it that he is putting out a video scheduled for release tomorrow, Tuesday, at 12:01 Eastern Time. So that would be 9/29/2015, September 29th, 2015, at 12:01 Eastern Time. Mr. Icahn has already released a preview of his warning. You can see it by clicking here. When Carl Icahn talks, Wall Street listens. And I just watched this minute and 41-second clip. It's just showing some previous things he had said and how he's the one guy out there saying, you know, he's not feeding the fluff. He's not feeding the nonsense. He's the real guy. And he says, let me just play this last piece for you.
This may sound corny, but I grew up in the streets of Queens. I love this country, and I feel so strongly about the dysfunction that is going on both in Washington and the boardrooms of corporate America.
The dysfunction going on in Washington and the boardrooms of corporate America. You mean like Goldman Sachs, JP Morgan, etc.? Yes. And not just them, a lot of other companies. You know, and the funny thing is, when you hear any reference to the old hippies, 60s and early 70s and the hippies, man, it's the corporations, man. It's the corporations, right? We used to, look at that as just nonsense, stupid hippie talk, hippie speak. The corporations. Oh, wait a minute. It is. They were right. And corporations will do anything to make money. Anything. So, the website he's going to be playing that at, 12:01 Eastern tomorrow, is carlicahn.com. And it's spelled Carl, C-A-R-L, I-C-A-H-N. Carl Icahn, ICAHN.com. I usually go to lunch right at that time. So I believe, though, I'll be able to press play when I get back from lunch. And be able to watch it. But this man, he's essentially saying it's going down, And again, like Greg said, when he speaks, everybody listens. Now, having said that, let's talk about the next Lehman Brothers. As I just told you today through my video about Glencore, one of the largest, mining companies in the world, have contracts all over the world, is pretty much going bye-bye. It is got 1.5 feet in the floor, in the dirt, to its deathbed of bankruptcy, if anything can even be salvaged. And again, I'm sure there's going to be one of the club members, the banker boys, and their companies waiting, salivating to pounce on that for pennies on the dollar per share. It's down 90% from its highs, I think, in 2011, from 2011. 90% loss, Glencore. But there's another large elephant in the room. Matter of fact, there's more than one, and they've been on the radar for a little while. And as much as I could see Glencore causing some serious damage in the financial realm, I think there's some bigger fish to fry that could really be the next Lehman and make Glencore look like a walk in the park. And this is something I'll just read you what Jim Willie wrote a while back, and Silver Doctors posted it on today actually. And he says it's called Jim Willie, the Golden Jackass. For those of you that don't know, if Deutsche Bank goes under, it will be Lehman times 5. With rumors escalating that Deutsche Bank's derivatives book may be on the verge of collapse, we thought it appropriate to revisit our exclusive interview with Jim Willie on the topic. And a bank failure contagion. That's what's going to push gold way over 2,000 per ounce again. Silver is going to be moving over 100, and gold is going over 5,000. A failure of Deutsche Bank would trigger a systemic banking contagion the likes of which the Western world has never seen. With Eurozone banks showing renewed signs of crises, Deutsche Bank deleveraging by a massive 425 billion euros over the past year, the fastest pace since 2011, near euro collapse, and Barclays admitting a 12.8 billion capital shortfall Tuesday, and fundamental indicators in the gold market screaming financial crisis, and GOFO rates remain negative for nearly 20 days, and massive inventory drawdowns at the COMEX and LBMA. The doc spoke with Jim Willie Tuesday in an explosive must-read interview. And again, this is a previous discussion. Willie, who recently stated that Deutsche Bank is under major duress and could be the first major bank to collapse in the next stage of the banking crisis, informed the doc that unlike the collapse of Lehman Brothers in 2008, which the Western central banks were able to contain thanks to $13 trillion thanks to $13 trillion in bailout funds, a failure of Deutsche Bank would trigger a systemic banking contagion, the likes of which the Western world has never seen. When asked by the doc how Deutsche Bank differs from Lehman Brothers in 2008 and what events could lead to a renewed banking crisis, he responded with, "My best German source informs me that 3 major banks are in trouble, and these 3 banks are fighting every single night to fight off insolvency and failure." He says that Citigroup in New York, Barclays in London, and Deutsche Bank in Germany every single night are in trouble. Now, I find that interesting that Citibank's on this list, his list of 3, because Citibank had a $50 billion silver position at the first quarter, as of the first quarter of this year, and just as quickly as it got here, it vanished the second quarter of this year, and they've winded it out somehow. How do you wind out of a $50 billion position like that? I don't know. But are they offloading that silver short in advance of their collapse? I don't know, but I just want to throw that out there for the time being. Something to think about. So he says the important thing to keep in mind about Deutsche Bank is that it won't go down alone, if it goes down at all. If it fails, it will take along with it 3, 4, 5, 6, 10, or 15 other banks. It will be 1 or 2 quickly, and then a third, then a fourth a few weeks later, then another before you know it. All of Italy and all their major banks would be kaput. My belief is that Deutsche Bank and its constant overnight risk of failure is somewhat tied to derivatives related to LIBOR, and also a risk related to their Forex derivatives. In other words, derivatives that the banks use to balance off the currencies. Believe it or not, in the derivatives world, gold is treated like a currency. Isn't that ironic? The Forex derivatives that the banks are involved in are very much tied to gold. The big immediate threat for Deutsche Bank, though, has to do with their problems in hiding debt for the sovereign nations applying for the Eurozone. For example, Greece and Italy couldn't have their debt ratios over certain levels. So what Deutsche Bank did was they turned nice big chunks of sovereign debt into currency swaps. For example of how this works, suppose you have $250,000 bad business loan that is stinking up your credit report. So you call up your favorite Deutsche Bank banker or Goldman or whoever, pick your criminal enterprise, he says, it's your personal favorite, and you tell them, look, I've got $250,000 in debt, and I want to make it go away. They say, okay, we can do something clever here. We can pay off your debt so your credit report looks good, and we can establish this $250,000 euro swap, and we'll take it off the books. It'll keep it off the books. Says so you have this $250,000 bad loan stinking up your books. It goes away and is replaced by something hidden, a euro currency swap. That's precisely what was done on a larger macro scale by Greece and Italy, and Deutsche Bank is involved with several of these. And the total that is becoming disclosed is $400 billion. Apply your typical ratios, and you can conclude that there are $10, $15, $20 billion short for capital requirements. The big banks are so criminal that they have converted fraud and criminality into a small cost of doing business. When asked to clarify his statement that a failure of Deutsche Bank would likely result in contagion of bank failures, Jim really responded with, Deutsche Bank is in a slightly different situation than Barclays. Even though Barclays just announced a $12.8 billion capital shortfall Tuesday, the former Deutsche Bank CEO Ackerman was forced out last year. Interpol came into Ackerman's office and conducted a financial document raid. There's a new sheriff in town. Sources indicate that big, powerful Eastern interests hired Interpol to clean things up. We had events in April, May, and June in which 5,000 metric tons of gold were lifted out of London. Eastern entities were angry as hell that their gold had been leased and rehypothecated. The London banks used the Easterners' gold as equity for futures contracts that went bad, like in Spanish, Greek, and Italian debt. Deutsche Bank CEO could not withstand an assault on their office to retrieve data, even though he appealed to several high-level politicians. Fast forward to July 2013, and now we are seeing several Deutsche Bank vice presidents being indicted under various fraud charges, and they are almost all cooperating with Interpol. They've flipped to cooperate with the serious fraud division of Interpol. London and New York remain fortresses for the cartel banksters, but Frankfurt might be in the process of being penetrated. Getting back to your question as to why Deutsche Bank failure would be different than Lehman Brothers, it's because they are involved with all the different sovereign bonds. Spain, Italy, Greece, France, they're involved with all of them and their balance sheet qualifications for the European Union. Deutsche Bank is involved very closely with all of the Eurozone currencies and bonds, and they have massive swaps interwoven with all the major Western banks. I have a client informing me that Deutsche Bank has a bunch of swaps that they wrote against Detroit municipal bonds. Say goodbye to those. Deutsche Bank has their fingers in a lot of different pies. Lehman Brothers was involved in numerous mortgage instruments. He says, don't bet your money that Deutsche Bank will go down, but if it does, the next day it's going to be Citi, Barclays, HSBC, Morgan Stanley, Societe Generale, and big threats to JP Morgan and Goldman Sachs. In conclusion, Deutsche Bank owns 25 trillion in over-the-counter swaps with the central banks and other major banks. So expect a daisy chain of derivative failures for the 1.6 quadrillion derivative market if it were to fail. Deutsche Bank cannot break down by itself. It would result in the complete breakdown of the European Monetary Union. In today's world, when a big bank dies, they merge with another big bank, another European bank, potentially Barclays. I think we are going to see massive amounts of money flooding into gold. And I'll say it too, silver for sure. That's what he said about the gold. A bank failure contagion. That's what's going to push gold way over 2,000 per ounce again. Silver is going to be moving over 100 and gold is going over 5,000. I'm as certain of it as I am certain that the sun will rise in the east in the morning come January. So, let's think about something Lindsey Williams said a long time ago and has maintained it. First, it will be Europe that blows up financially. Then it will come to the U.S., but it will go there and happen there first. And he says once you see it happening, you will have what he was told, 3-4 weeks, of just a few weeks, to get your stuff in order, if you haven't already, in America. That's what he said. So, keeping in mind, as I said the other day, if you had gold or silver and you are a Brazilian citizen, you would be sitting so pretty. There's a number of countries that could say the same thing even right now, with silver down in the high 14s, whatever it's at right now, 1466 currently, and gold $1,135. There are countries out there who, if those citizens have their hands on gold or silver, could care less about what their stupid government, moronic central planners have done, because they just made them a small fortune. Now, of course, if you only have a few coins or a small amount of silver or gold, you're not making a small fortune. You're just going to have a little bit of extra money to play with, and that's about it for you. That's why I've been screaming for years on YouTube since 2009 when I started, end of that, I think, and then I got really heavy into it 2010. And I may have even had a different channel at the time. I can't even remember. But that's why I've been saying, spend every little extra penny you have on precious metals, because the day will come, and we're getting close. I mean, you can see it. We're getting close. The day's going to come when every one of us who said to get it is vindicated, and you see the prices where they go. And I do have a sneaky suspicion that before the COMEX or anything else defaults, they won't let it default. They're not going to show you that, yeah, you guys were right. We never had it, and now we can't deliver, so we're just going to stop delivering. No. They will bring out the big guns. They'll have I don't know if it's a terrorist attack, or they'll have a cyber attack and the COMEX went down, or they bombed Chicago and the CME group, Chicago Mercantile Exchange, which runs the COMEX. They're there and they shut down and everything. There ain't no way, in my opinion, they're just going to all of a sudden have a default occur and just let it be that. Oh, yeah, sorry, default, conspiracy theorists were right. And then prices skyrocket. No. They don't work like that. They have to shift the blame on some event, some other person, terrorist group, whatever it is, and blame it on that. Now, you can already see we're getting close to something coming here, like whatever they decide to do to deal with it, because the U.S. Mint, again, I just mentioned the other day, has cut 20% more from the primary dealer's ability to get, not the ability, but 20% of the allocated amount of like Eagles and stuff that the primary dealers were allowed to get. So if they were allowed to have 100,000 coins each to sell off to the retail market, they now have 20% less. That's 80,000. I don't know the number. I'm just throwing 100,000 out there just for the hell of it. It's way more than that, I'm sure. Why would the U.S. Mint, which is by law, has to have enough precious metals to meet public demand, and they keep failing miserably? Delay, we're waiting on blanks, we're doing this, we're just going to stop all of December, we're not going to make any coins, and we'll wait till January. January comes, we're cleaned out again, we got to wait another 3 weeks. This happens so many times now, I don't even know how many times it's happened. Quit counting. And now they're cutting how much you can actually purchase once they actually have it. Oh, we're cutting it down another 20%, after we're already doing it previously. That's because they need the precious metals to feed China, India, Russia, etc., their appetite, and pretend that all these big, giant, enormous trillion-dollar numbers of paper futures contracts that supposedly have an underlying asset for each individual contract, we have to pretend that that's still true and feed those guys the amount of precious metals they want. When the reality of it is, as they just showed the other day, there are over 200 paper contracts on the futures market for one thing of backing of gold. So that's a 100-ounce contract usually, gold. So if I buy a futures contract, it's got 100 ounces of gold sitting there in a vault in a safe somewhere that's not touched, not lent out, not rehypothecated, sitting there ready to be delivered. You go out and get a contract, same thing, 100 ounces. You too should have another 100-ounce pile next to mine, pretty much with your name on it, should you demand delivery on that futures contract. But the way it actually is that there's only that one pile of gold, 100 ounces, that I have with my name on it, and then the next 200 plus people who get a futures contract for 100 ounces of gold, we all have their name on that same pile as me. So if one of us out of the 200 people pay off that contract in full, demand delivery, I want the 100 ounces, that means there's approximately, again, because it's more than 200, but let's just say it was 200, 199 people who have current futures contract who can at any moment demand delivery. But I already took it. This is a ratio of 200 to 1. That's how bad it's gotten. I remember when it was noticeably, and not even the corporate world would recognize, or the bankster world would recognize, 100 to 1. Like it's typical, 100 to 1 ratio, paper to real thing. It's over 200. So if they have to throw more paper at something, that leaves less of the real thing, at the same time that India, China, Russia, and other countries are wanting it badly, buying huge amounts of it. That, my friends, is why you saw the mint lower the allocation, what's allocated to the primary dealers by a whopping 20%. Because they need, the banksters, their club members, they need those precious metals. So you peasant citizenry can't be going to the mint, going online, going to your favorite coin dealer who goes to the mint, and buying your coins because there's 2 weeks, 3 weeks, 4 weeks delays continually. Look no further. As I sit here today, silver is at $1466. I'm going to go to APMEX, very well-known place. Silver Eagles, view all products. Uh, 2015, of course, as low as 1987. Well, that's if you buy, 500 at a time. The next one, which it says just a random year, they'll pick it for you, is $20.67. Most of what I'm seeing here is $20, $21. So 14, 15, 16, 17, 18, 19, 20, and 21 at $7. We're in the 14s. We're at almost, same as the other day, as I said, 50% premiums. Depending on what piece, 40 to 50% premiums. So the cost is this, but you're going to pay 40 to 50% more than what that cost is just to acquire it. How is that? That's because the scarcity is real. That's how. So I think Jim Willie's on to something. Is it going to be Glencore that brings things down, the mining company? Is there stuff happening behind the scenes that credit default swaps triggering? I mean, again, if Deutsche Bank's involved in that, the mining industry, and they're going to, they're trying to hide and cook the books on that. They've got their fingers in municipal bonds and sovereign countries, and they're finished. And what was the other one I just read? Zero Hedge. UBS is about to blow the cover on a massive gold rigging scandal. Oh boy. They rigged everything else, not gold and silver. Scout's honor. We rigged everything else, but not gold and silver. Conspiracy theorists, you guys are conspiratorial on that still, and you get the blame on that. That's nonsense. You guys and your futures contracts and manipulation. Yes, I know we got caught for that, and I know we got caught for that, and I know we got caught for that, and 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 that, but not gold and silver. Trust us. I wouldn't trust you with my life. So I don't know if I should do a second video. I think I should on this. Actually, I think I will. UBS is about to blow the cover on a massive gold rigging scandal. Quick look shocked. So I'll do a second video.